Today's highest conviction chart, Lockheed Martin Corporation. The verdict is short. Don't skip ahead. The setup only makes sense once you see what's underneath it. Structure today, patterns first, indicators second, institutional read third, and the trade plan closes it out. Let's start with the chart. Let's read the tape. Daily time frame, 60 bars on screen. Price is moving sideways here. Range bound, consolidating recent moves. In a chop like this, you want patience, not chase. You can see the dotted lines on the chart. Green is our TP at $449. Red is our SL at $581. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, head and shoulders. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. 1 second. If charts like this are your thing, subscribe now so tomorrow's scan lands automatically. Pattern number 1, this is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks. Feet 449 on 23. Measured move target 430 on 87. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 16.2%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 2, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs and $503.50 west. Measured move target $509.80. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is +22%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 3. This is the head and shoulders. It's a bearish formation with 3 out of 3 strength. Head, $550.99. Shoulders, ours $542.58. Neckline, $500.07. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 12.7%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Let's talk key levels. Every trade is really a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.50, technical 1.00. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 12, and that tells us we're in a weak trend regime. Important because some strategies only work when ADX is above 25. On balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now we switch lenses. Retail view done. If the institutions aren't on the same side, none of it matters. Smart money concepts. Let's check. On the daily chart, the SMC bias is bearish, with a downtrend market structure. The most recent order block is a bullish zone between $535.17 and $545.91. That's where institutional orders are likely parked. We've also got an unfilled bearish fair value gap between 572.32 and 574.47. Price tends to revisit these imbalances. Most importantly, we just had a chunch bearish move at 547.47. a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened and those prices act like magnets. The point of control, the most traded price, is at $516,040. The value area runs from $398.34 on the low side to $539.82 on the high side, meaning 70% of all volume traded inside that zone. The signal here is neutral, price at equilibrium, trading near POC, 516.40. Value area, $399.34, $519.82. Expect consolidation. Order flow next. No level 2 here. So we read pressure from closes and volume, a solid proxy. Over the recent window, buying pressure accounts for 43% of volume versus 57% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money flow index, the volume-weighted RSI, reads 29, signal neutral. Williams %R is at 55, neutral. Chaikin money flow reads is 0.20, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Quick zoom out, the bigger market picture. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR %. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. The full plan is almost here. Before it lands, subscribe, and tomorrow's chart comes to you. Now the slide nobody on YouTube actually talks about. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. Everything stacked. Now the levels. We're shorting near $561. Target sits down at $449. Stop loss above at $581. Risk to reward, 5.52 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 5.52. Horizon, roughly 5D. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Tomorrow morning, the scan runs again. Subscribe and turn on the bell so you see it first. So zoom out for a second. What we just walked through on LMT, that's a short bias setup projecting roughly 19.9% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. If this stacked up for you, say so in the comments. Trade safe. See you tomorrow. Same time tomorrow. The scan runs, one chart wins, and you get the full breakdown. Don't leave it to the algorithm. Subscribe and turn on the bell. See you in the morning.